Most of the videos that I try to do are conceptual in nature, but I believe this one is important as well, about irrelevant pay heads and wrong salary structure. Various acts and rules connected to payroll keep changing every now and then, but our salary structure has to be absolutely right, isn't it? Today's video is going to be about that, and for our new friends out there, welcome to our young channel for you smart HRs out there. And my name is Akash. I am the director at Relativity for over 12 years, and let's jump right in. Actually, the timing of this is very important. On the 25th of August, I did a detailed webinar for about 1.5 hours conducted by NIPM Chennai chapter on top 8 changes in payroll and compensation for financial year 2021. It should be right up here. If you are interested, do look at it. This is the webinar recording that we have, and I felt this one point that I discussed there is very important that I should speak in detail, and hence this video. There are multiple reasons why gross salary is split into various pay heads. The top 3 reasons are: number 1, there is a law, like for example basic, and number 2, to optimize the salary for tax purposes, for example the various allowances that we have on the salary structure, and number 3, to differentiate different group of employees. For example, a night shift allowance is actually given to somebody who's working on the night shift, right? Yes, and when we get this wrong, there are so many things that happen. The top 3 things that actually go wrong are fines and penalties, non-compliance risk, and negative impact on the company's brand. So first, let's talk about the irrelevant pay heads on our salary structure. Remember, conveyance allowance, my friend, 1,600 rupees every month. I mean, who at the end of the day did not want a tax exempt allowance? Similarly, we had even medical allowance that was about 15,000 rupees per year, or about 1,250 rupees per month. I mean, every employee welcomed these kind of allowances, right? But in 2018, the Finance Act introduced standard deduction of 40,000 in lieu of both the allowances. In fact, in 2019, 40,000 was changed to 50,000. Good job, Income Tax Department. So if you still have conveyance allowance and medical allowance on your salary structure, my friend, you are old, you are outdated, and unfortunately you are incorrect as well. A few more companies are still having petrol or fuel allowance. My God, friends, we are in 2020, not in the 1990s, right? 20 years ago it was there. And when Dr. P. Chidambaram introduced the fringe benefit tax, all of this became redundant. So if you still have that, I am sorry, that's also something that should not be there on your salary structure. And yes, the city compensatory allowance. I mean, it works in a large organization, but practically if you have employees about 500 to 1,000 people, city compensatory allowance is absolutely fully taxable, and it doesn't serve any purpose as well. It's practically useless. So my friend, if you have any of these allowances, get rid of them right away. It's time to ditch all the old and useless stuff. Have only the relevant ones on your salary structure. Number 2, we should definitely talk about incorrect tax exemptions. My friend, when you have a free canteen facility, why do you need to give food coupons, right? Allow me to explain. Food coupons are provided to support the cost of meals while at work. The tax exemption value is rupees 50 per meal. Some companies give about 1,250 rupees per month, while some companies give about 2,200 rupees. That's a bit of a gray area, but that doesn't matter. When you already have free or subsidized canteen facility, I don't think food coupon should be there on the list of your benefits to your employees. Wrong again. Another thing that I see wrong is about the driver and car allowances. If the car is owned by the employee, and if he is going to use it either for totally personal purposes or personal plus official purposes, the act is very clear then the driver allowance and car perks are only limited to rupees 900 and either 1800 or 2400 per month, depending on the CC of the vehicle. The rest of the value that you pay as an allowance or reimbursement or whatever name it is called as, it actually becomes taxable. I know income tax laws are very complicated, but you know what? They are not more complicated than you and me. You know, nothing is more complicated than humans. Probably aliens? Yeah. Except humans and aliens, nothing more is complicated, right? Continuing on the same point, this one will be very interesting, okay? So just listen carefully. If the employer's contribution towards Provident Fund, NPS and superannuation exceeds rupees 7.5 lakhs, then that value which is exceeding rupees 7.5 lakhs becomes taxable in the hands of the employee. Point number one. Point number two, the interest that is earned on that excess value is also supposed to be taxed in the hands of the employee. Is it confusing? Okay, so let me give a real-time example. Let's consider this employee Rahul, okay? If your contribution to Rahul's Provident Fund plus NPS plus superannuation is 10 lakhs in a financial year, then the first 7.5 lakhs is non-taxable and the remaining 2.5 lakhs is taxable. It also says that the income earned on this 2.5 lakhs should also be taxed. As crazy as this sounds, this will certainly affect certain highly paid employees or certain employees who are on the director level or executive management level. You don't want to make a mistake with their tax calculations. Do you really want? I'm sure you don't. So to summarize, my friends, you shouldn't have unnecessary and complicated salary structure. It should be relevant, right? So we spoke about the irrelevant pay heads like conveyance, medical, petrol, CCA, and we also spoke about incorrect tax exemptions on food coupons, driver, car, retirement benefits, etc. A survey that we did earlier this year pointed out about 52% of the small and mid-sized companies had one incorrect pay head on their salary structure. My friend, I hope you won't allow this to happen in the company that you are working for. Right? Last but an important point, my friend, we do all of these videos, our videos are released once in every 15 days, as you know. A lot of effort goes into that, a lot of thought process goes into doing these videos, and we are doing this because we want to share what we have learned over the last 12 years, right? We want to share it with you and we want to share it with the HR community at large. And the help that I want from you, my friend, is can you please share these videos if you liked it, okay? If you find it valuable, if you find it useful, please share it with your HR community through WhatsApp or through Facebook or through LinkedIn, whatever you feel is right. And I'm sure they will also be equally thankful to you. Yes, my videos will definitely get more likes, but wouldn't your friends thank you for sharing this valuable piece of information? I'm sure they will. Well, my friends, time to say goodbye. Tata, see you, bye-bye in the next one.